If you trade opening range breakouts, you've inevitably made one decision that shapes nearly every single trade you take: your time frame. Whether you've chosen the 5-minute, the first 15 minutes, or the first 30 minutes, whatever that is, most traders pick one and usually never look back. So if you choose the 30-minute time frame as your morning opening range breakout, typically you're just trading the 30-minute, having no idea if it's the right one or not. To help answer that question, we backtested 1.17 million opening range breakout trades through our backtesters. We tested more than 600 symbols and went back more than 300 trading days to gather this data set. Now, the most common advice that you'll hear, at least from YouTubers, including ones that I believed myself, is that the 30-minute opening range breakout is the most reliable. The logic makes sense on the surface. You're giving the market more time to settle, you're filtering out the opening noise, and then you're letting the real direction emerge and joining in that direction. This is also easy to internalize as a trader. It just makes sense. They think wider range equals a more clear signal, plus you allow more time to pass, which means a little bit more certainty, or at least that's what we equated to in our heads. Now, here's the problem. We put this theory to test, and the actual data says something completely opposite. The 5-minute opening range breakout has the highest win rate, not the 30-minute, not the 15-minute. The fastest, tightest, noisiest time frame is the one that tends to win more often than either of the two safer options. With real numbers, 53.78% is the win rate on a 5-minute average across these 600 symbols. On a 15-minute, that number drops down to 50.97%, so call it 51. And on a 30-minute, that number is less than 50 right now at about 49.38%. Now, why is this the case, you might ask? Well, according to me, or my theory rather, the 5-minute range is about 76 cents wide on average, which is a fairly tight stop. And because the range is so narrow, trades tend to resolve themselves very quickly. Now, if you're watching our scanner, you'll see this real time where the 5 minutes come and go very, very, very quick. However, using numbers, only 3% of 5-minute trades are still open at the end of the day. So what that means is 5-minute trades have really resolved one way or the other, either hitting the target or the stop. Now you compare that to the 30-minute time frame, for example, where nearly 13% compared to what we saw 3% in the 5 minutes. So 13% here of the trades never hit their target or stop. They just sort of drift around. So the 5-minute opening range breakout doesn't really give the market much time to be indecisive. It forces it to be resolvent in its decision one way or the other. Now, if you've been avoiding the 5-minute because it felt too risky, you've been avoiding what seems to be the time frame with the best hit rate. Now, here's where it gets even more interesting. Your target and stop rules change the numbers more than your time frame of choice does. Let's take the 5-minute opening range breakout one more time. If you set a half-range target with a full-range stop, your win rate jumps to nearly 69%. The same time frame, same symbols, same market. Now you just changed where you take your profit and where you cut your losses. That's the only variables that you changed. However, that one decision swings your win rate by nearly more than 30 percentage points. Flip that around. Now we go full target versus a half stop. You're aiming for bigger wins with a tighter leash. Here, the win rate drops to 39%. You lose more often, but the wins you do get are significantly larger. Picking a time frame is step one, but if you're not testing any of these target or stop rules, you're, I think, optimizing on the wrong set of variables. Now we come into the 15-minute time frame, and this is where I'm hoping it'll really click in terms of changing how you think about win rates. The 15-minute opening range breakout has a 46% win rate on a full target, full stop setup. You're losing more than half of your trades, and most people, I think, would throw that strategy completely in the trash. It is not one that you really want to add to your library of strategies. But what's interesting is that this particular strategy has the highest trade expectancy of any combination we tested, nearly 4.4 cents per trade. And while that sounds low in terms of EV, you have to keep in mind this is blended, and any number above zero, meaning a positive number, is what we're looking for. A positive 4.4 cents is actually quite good here with the blended average. You win constantly, but each win is small. Now, win rate here is very clearly not equal to profitability. A strategy that wins 46% of the time can make you a heck of a lot more money than one that wins 69% of the time, feels good, but doesn't actually make you money. If you're choosing strategies based on win rate alone, you're optimizing for comfort, not returns. And that's not a recipe for success. Now, under all of these averages, I tried to uncover some specific stock patterns, some specific equities that we would want to focus on, where this is working well. So I looked at a few stocks. Tesla is one of them. Tesla has a 57% win rate on the 5-minute opening range breakout, and it makes almost $1 per trade on the 30-minute breakout. It's the best opening range breakout stock in the data set of stocks that I looked at. The other stock I looked at was Meta. It's strong on a 5-minute at a 56% win rate, but that win rate drops to about 37% on the 15-minute. Same stock, completely different behavior, again, based on your time frame. Now, SPY and QQQ, which I know most of you trade, sit right around the 50% mark everywhere. It feels like the strategy is too quote unquote efficient, where the edge gets arbitraged out on these major index markets. Very easy for algos to trade it there. So, no real edge I could find on either of those two index markets. The best time frame depends on what you're trading and then running the backtest to figure out what is the strategy. For example, running the 5-minute on Tesla and the 15-minute on Meta would have given you a better result than using the same time frame. So for example, the 5-minute on both Tesla and Meta. So having the right time frame for each symbol and backtesting the symbols in your watch list, not the universe average, is the next way to take this strategy and apply it to make it better for your particular use case. Improve that ROI. Now, one more thing the data revealed is that short breakouts tend to win more often across nearly every time frame. And this is again over the past 30 days. So that data might be skewed with what the market has been doing, a lot of choppy behavior. 54% versus 53% on the 5-minute. But the long breakouts make nearly twice the average profit per trade. Stocks drift up slowly and fall fast, so shorts resolve quickly with smaller gains. Longs takes longer, but they produce bigger moves when they do work, given that the market, with all of the index funds, the funds that actually move the market, tend to resolve towards the upside. So if you're a win rate trader who wants consistency, short opening range breakouts are actually where you might find your edge, even in the index markets. If you're a P&L trader who can stomach losing streaks, for example, for bigger payoffs, then you'll find that long side breakouts are where you might find more of the money for your full range targets instead of just your half range targets. So the bottom line in all of this, which time frame should you actually trade if you were to answer that question? Well, the 5-minute opening range breakout, which I think most traders discount, is very much a speed strategy. But if you want the highest win rate and you can handle the morning chaos, the 5-minute, which a lot of traders ignore, is actually a very profitable strategy. Use the backtester to figure out exactly the right symbols. You saw Tesla as one example, but you can find others, and the scanner will give you this list real time. Plus, use the morning brief to know where that 5-minute is already a strategy you want to deploy. The 15-minute is for systematic traders who want the best risk-adjusted returns. You'll lose more often, keep that in mind, but you will make more per trade. The 30-minute is for patient traders who want the largest total dollar return and you can tolerate a sub 50% win rate. None of them is quote unquote universally the best. The best one is really the one that matches a few factors. One is how you trade and what you can execute and the symbol list that you're looking at. Every number in this video today came from our opening range breakout setups backtester. We have more than 150,000 total historical setups with 1-minute candle data. You can test any symbol, any time frame, any rule combination, and see the win rate before you risk a single capital of your dollar. The link to sign up is in the description box below. We're running a special offer through the end of this month. I'll see you in our next update.